Hey, good morning, my neighbors. Welcome to another episode of BYPTT. Before you take the trade, I got a lot to cover. I'm a little tardy to the party, but I'm excited because I'm gonna get a few more upgrades as I prepare all of my stuff for y'all entertainment pleasure. Um, that said, what up? This market is doing all types of fun stuff, so don't forget to hit that like, subscribe, and that bell button. And what I'm going to do is kind of go over a couple of things. Well, actually, you know what? Let me do this. A little rough around the edges, so I gotta remember where all my cameras are. I want to say this is it. There it is. All right. So again, this is one I went ahead and brought up in one of my mindset classes. You gotta become, as in be, do, have, not have, do, be. Right? You gotta have this so that we can do the things and become what you want to be. You gotta become what you want to be first. That's the only way you're gonna get there. Oh, and before we get there, yeah, this is a couple of my upgrades that I'm getting in. I just gotta wait for two more to get through the shipping, and we will be conquering the visual trading space and bring you all that good stuff. So, anyways, let's get to this. Become the person that you plan to be. That's the hardest thing in the world, right? You gotta set the foundations, just like you gotta set your plan for everything that you're doing and the whole nine. So you gotta first become the person that you plan to be. All right, and then do what it takes to become that person. All right, not do the things that a person that is that thing. If you want to be a philanthropist, if you want to do all those nice and pretty, fluffy, cloud in the sky things, you got to get ready to do that by doing the things that they do. So if you're a procrastinator, guess what? You're gonna procrastinate. If you are this, this is that building factor in itself. And then have the byproduct of your work ethic, of what you did to become the person who you plan to be. Be to have. Be to have. Be to have. All right, so that said, let's go ahead and get into these charts because this is what we're going to be looking at as a whole. Let me go ahead and maximize this one. Let's bring over the NQ. Where are you, NQ? This is NQ. Here it is. All right, so first thing I want to kind of point out is that that micro trend was affected. That major trend is still in effect. They are trying to drop it off of a cliff. They cannot. We have tried to make lower lows. They buy the dip, and to be honest, I think they are going to push this up again for another day. But the funny thing about it is that if I look at this chart with complete objectivity, then that means this barcode in action is going to do one of two things, right? We didn't get, actually, we did. We did not do it yesterday, but they did it last night. I did not notice that. Oh, I'm a little upset at myself. I was playing some London session last night and I screwed up royally. So shout out to my Get Rich or Fit trying folks. Now it's two sessions that I owe y'all. When it's all said and done, we're gonna go ahead and get that thing recorded ASAP. Part of all the context stuff that I gotta get. And oh my God, really? Sometimes you gotta look at the forest instead of staring at the trees. They look like it was gonna get more bullish. This whole entire thing, I think, is going to be a big old order block. I think the Bears are sitting here and they're like, ooh, I can't wait for them to come around here and think that we're going to just let this thing keep on running bullish. And that range can expand further if you can look here. So this is the ultimate range, which is brings us back into like the December levels and everything else. But I do really think that that range actually extends further than that because they know that they will not like what happens if this, because again, this will take new highs. That it's almost like there's almost no resistance. We're in clouds now. There's almost no resistance when we get past here. So only resistance is 22,425. And if you remember what I was talking about yesterday, I was aiming for that 22,000 all damn day, and it gave some solid moves, very very solid moves, and I was happy about it. But now it's time for them to, you know, step their game up. All right, step their game up. If you're gonna come through here, come correct. So we're gonna see if this is an accumulation phase for us to kind of drill through this order block. Not going to be an easy thing. Okay, not going to be an easy thing. I will not be surprised there'll be another pullback. As long as the pullback doesn't come too deep past here, it can come back. Actually, you know, I got a leap play going. We're going to just shut that down right now. I'm not even going to bother with that. Actually, let me put this on for y'all as well. So what you can say, just to let y'all know, leap is doing okay. I'm in the top 1%, but I'm getting my butt whipped. I gotta figure out how they're doing things. I really think they're doing multiple instruments, and I'm just not ready for it. So this leap, I'm just excited to just be this far. So we'll just keep that party going. Anyhow, it just really, how can I say this? It's not something that you want to kind of, okay, let me take it a step back. See this action here? I'm gonna draw a bar right here. If we look here, they were attacking this. Actually, I'm gonna need one that's a little lower. Let's go with this one here. Right? If you look here, they spent a lot of energy trying to get there. Right? They try to get there as much as they can. Like, oh, let's take out the highs. It looks so nice. It looks like something we should be knocking off the park. Right? But all of this is just that drip, you gotta pull back. And what we're getting is kind of like these tiny candle actions on the daily, tiny. And you can see these violent drops when it's doing these tiny little moves because they feel like they can knock off what I think is the retail traders as the institution is sitting back. And then eventually they just went ahead and took that bounce. And then when we try to get through here again, you can kind of see tiny. They liquidated and they couldn't push them around. And then they were like, all right, let's go up to this level. And this is our establishment. So them trying to get back up in here, you can see tiny drop. Tiny drop. Right? So if that's the case, could this be tiny and then the drop? Are we going to get a major move to the downside? I would say if we were up on a higher register stochastic, maybe, because that's what's really required for that to happen. And we have yet to really do that. But anything can happen. The market is one of those places that it's going to do what is necessary for itself to keep its balance. If there is no orders up here to, rebalance, they got to be able to liquidate, or there's not people that is holding the sell position thing is going to drop and they get liquidated, they're probably going to get their wig taken. And this is what we tell you: buy at support, sell at resistance. It's just going to stay stagnant until they feel like they got enough orders to get up here. And then y'all gonna say, well, they manipulating the market. Yeah, in a way, yes, because guess what? I'm not gonna be stupid enough to go ahead and sell at this point until I get a confirmation that tells me I'm okay in that sell position. Just like I'm not gonna buy into the market unless I get confirmation that that's gonna go to those levels and respect my stop loss. That is the primary purpose of us trading. So very interesting action that's happening here. I think that tiny and then drop would have been cool if we had that stochastic in that overbought, oversold area or whatever. And if we go over here to the MACD, the MACD is still in the bullish side, and this bullish side can stay right there until it's ready, right? Until it's ready. Look at it. That was a massive drop, but we're still in the bullish side, and then they picked it back up off the ground, and they noticed, oh, we can't even get any higher highs. You put in your bearish divergences that way. Here's another one. We got a nice little right here, but these still had some massive move to the downside. These are the things you want to kind of look at for patterns. So I think overall the market is trying to find itself in its identity. I think they want to get back to that 22,000. I think that they want to get up in there and avoid really putting anything crazy, but I do think that it's going to be higher than all the other levels, which is probably going to be above here somewhere. and it's going to put in a very, very interesting bearish divergence with that, because it's going to spike up, and I don't think it's going to be as high as this level here. And then we're going to get those divergences kicking in again. All right, so just keep that in mind going into the month. Well, I would say that's probably going to sprinkle into July. I will not be surprised if it sprinkles into July. All right, let's run through the rest of the commodities. Let's get into oil. Oil is breaking out, like I told y'all. I do think that oil can get up into the rest of this fair value gap. I do think, and I teach this in one of my classes, I think this area right here is an order block, and if you look left, bounce, 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 bounce. Like this is an area that has a very tough time being able to use to break down. Like they had to use very, very strong institutional movement to get down here. So now that we're coming to that level again, the first reaction I think is going to be a rejection. It's very, very possible. So look for oil to pull back when we get close to this range. Or maybe come back to this trend line, $64, $63. News should be coming out for oil inventory. Let me go ahead and find that out. You already know my favorite place to go is my FX book. Right. My FX book is a really, really cool place. I like it. I'm just used to it. It's one of the first ones that I learned. Ooh. Did they Oh. Oil inventory. If I'm not mistaken, it's supposed to be on. If Neil, if you're on here, let me know. Oil inventory is supposed to be on Wednesdays. It's coming out tomorrow with the CPI data. So this can try to. All right, I'm not a gambling man, and I'm not saying this is what you want to do, or whatever the case may be. This is basically here. There is absolutely nothing coming up. There's this, we got Redbook that's coming, does nothing really to the market. We got some bills coming out, auctions for bonds, and the reaction to this can give us some catalyst if people are running away from bonds, which the ZB, actually, you know what, let me do something fun with y'all. The ZB has been on a downtrend. It is building a falling wedge type of action. It hasn't broken out, and we've been dropping since 2020. No one wants to invest into our country. So if that is the case, then we could get oil to kind of give you a relative solid bounce after the bonds, because that sell-off means that they're taking money out of the bonds, which is a safer space, and they're going into some riskier assets because they feel comfortable to get into those riskier assets. Just a little FYI. So if that is the case, this should be a very, very fun Thursday. So keep that in mind. You know what else comes out on Thursday? Let's go to this report. CPI. We already know that's going to be crazy. We're going to get some inflation data. This is going to get Jay Powell to start talking about rates. You got this. And my bad. I was gonna say and jobs report. I am so behind. Look at me. This is what happens when you play too much London session and Asian session. I'm thinking today is Wednesday, right? I know this day is going to be pushing into that Thursday. This is Tuesday. There's nothing on Tuesday. And then Wednesday. All right, so anyways. So we got Wednesday. That's going to give us all that data. Good thing there's a date up here. And then we got also right here. That's going to be the jobs report. That's what I was trying to get to. Boom, 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 boom. Listen, traders, unfortunately, we have almost no sense of time to a certain degree because everything is in our chart as far as what time frame that we trade. And if y'all know me well, I trade as low as the 15 seconds and the 5 minute. I'm thinking this thing was going to do something crazy. Oh, man. Yesterday was Monday? Oh, my God. That felt like such a Tuesday. Anyways, moving on. So look out for this order block. Look out for the inventory to come out on Wednesday, and that inventory is going to go ahead and pull it back, but they put in CPI data with it. So that CPI data comes out before it. So maybe you'll do a drop then pop or pop then drop. And then that's going to be based on the oil inventory. Don't forget, we got a contract expiration. We're going to be shifting in the middle of Tuesday the 17th. So they're going to go ahead and get ready to get contract. Just a little FYI. All right, let's go ahead and push this forward after blueprint so much. Yeah, that's gonna be good for the reels. Uh, we had this entire downtrend on gold, and then they had a nice little drop. It tried to take out the lows overnight, and you could see they already bought up the dip. Could this be the move to get us back into that upside? Possibly, maybe. But I would say for the most part, do not try to play too much to the downside. This thing has been on a tear. Do not doubt gold, at least not yet. I'd rather short gold after it breaks one of the major trends deviation than for me to try to break it now. This is an uptrend for now, but that's just a micro move, and I don't think this is strong enough to kind of knock everything off. If we go over to the weekly, possibly get a nice little accumulation to go ahead and push even higher. But again, this MACD looks crazy. Let's see, when was the last time it was around that 150 level? Has this ever happened before? Going through historical data, no, not at all. The highest is here. So we're doing some very crazy stuff. This is the 1980s when it was this high on the MACD. So let's go ahead and look at that 1980. It got into here, solid rejection, had a, I don't see no divergences on this rejection, but you could kind of see they try to take it back up and they couldn't. And when we got into this lower register, when they spiked it through, they used that home momentum after they got through the zero line. Let's see if another one. All right, this one was a solid one here. That was the pandemic, 2020, right? Been moving up and then had a nice little move. This histogram is not as high. Maybe that's a little bit of divergence. I can't really see it. I want to kind of keep this point going. This was when gold was starting to really take off. You can see this area has been an area of rejection before, and you can see it just came right through it, and we're here. So what am I saying here? What I'm saying here is that at the end of the day, yes, I get it. Gold is not something that you want to relatively short, but what one person taught me and my mentor has said over and over again, trend is your friend until it's not. And this is what it looks like. We're in this uptrend. Use it. Stay with it. Don't force yourself to take these shorts just for them to go ahead and rip your face off. And I think a lot of people got caught in that. All right. So gold dropping would mean the strengthening of the dollar. Gold dropping will be strengthening of somebody's dollar. Ooh. Let's see what these tariffs talk about. All right. And then don't forget to chart silver. Silver is still ripping through and has been pushing. Again, it's putting in multiple divergences. So I think this is a bait. So be careful with it. But for the most part, it's snatching gold and trying to pull it right back up, which is what I told y'all before. If we look over to the daily, that drop off on gold right here for the day, silver hasn't recovered, hasn't made new higher highs, and I don't think gold's going to go ahead and try to push up without silver doing that. It is a little exhausted. Could get a little reset. Are they waiting for June 27th? Maybe. But, you know, quad witching is when they switch contracts, so they're probably going to do it a little bit before. So start getting prepared to get into your new contract over here at the, oh, I'll take that back. Switch from N to U. So get ready to start using U all the way until we get into Z. All right, just a little FYI. All right, British pound. The British pound. This one's kind of pulling back. You could kind of see what NQ is doing almost the same thing to a certain degree as its consolidation, and it's also ES is kind of flatlined in itself. But the British pound is the one that kind of is in sync with us. So as they're gaining in value, the market goes up because it's putting pressure on the US dollar. I think their ride is almost over. Divergence, and this thing can go right down. So keep that in mind after you look at the British pound, just in case this thing starts to do something crazy, you can prepare yourself properly. All right. This is ES again, like I was just doing just quickly. It is flatlining like crazy, just flattish, especially how you can. This is where things can get choppy. I do believe that the market is doing what it's doing because they're waiting for the CPI data, which comes out tomorrow. on a Wednesday, not a Thursday. I don't believe I made that mistake. All right, so that CPI data does help to let us know, are we going to fill the rest of this gap? If we fill this rest of this gap, then that means we should be staying bullish. Are we going to go ahead and come down? Well, there's this gap that we created off the contract expiration, and they're anticipating, or they're pricing in the fact that, hey, we are ready to go ahead and rock off and never come back down here. So, but if that CPI data comes out spicy and goes against the whole entire consensus of what built this up, look for this thing to go ahead and pull back into this gap. They need to rebalance this area because the buyers from here are still inside the market in some way, fashion, or form, and they are looking for them to take out some new highs. I don't think we come back and reset this without them taking this area up or reset the other way from here. That's just where we are. We're kind of like in between two different order blocks, two different targets, two different islands. And if you don't know what that means, let me take this a step further for y'all. I love doing this with y'all because I kind of, give y'all a little sense and idea. Isn't this a fair value gap, folks? Right here. This is a fair value gap. Right? Nice, solid, bullish fair value gap. The market, God, pandemic, we're getting. I'm sorry, I'm not trying to make fun of the pandemic, but I'm just giving you a little instance in comedic form. It's not being petty. Oh my God, the pandemic, we're going to go ahead and keep going down. We have no bottom. Where's the bottom? We don't know where the bottom is. And then meanwhile, we were putting in all these spaces. We were putting in this gap. This was bearish. And then we put in this gap, which is also bearish. Right? So when this happens and we put in this fair value gap intention was to try to test areas here because the buying pressure is so strong. They're like, all right, where am I going to take my money? I'm going to take it off of here. Why? Because of the gap. All right, cool. All right, now I'm going to go ahead and play to this side. Wait, we're not going down? Hold on. What does that mean? All right, we broke right through here again. All right, I guess we're going to go ahead and go up to the upside again because they went ahead and held it. And then when we got over here, what did they do? They're like, I'm not too sure if we're going to get there. All right, let me just sell now before all hell breaks loose. And they're like, wait, they buy, dip. And then it pushes all the way back up again. And then they test this. And then guess what? It gets to some high that is just ridiculous, right? And then it comes back down to use it as support. Can't use it as support. Then they use it as resistance. They try to push it right back down. Probably get back down to this fair value gap. But they notice, oh, wait a minute. We can't get down there. Double bottom. Breakout of structure, and then it continues up. I'm sorry, this is how my mind thinks. It sounds like a story and with a plot and a twist and all that stuff, but this is how I kind of view things. That way it makes sense in my head, and then you can kind of see where the story goes, right? So does that mean that we're supposed to fill every gap like everybody always says, especially those pundits and gurus and all that stuff? No. We don't have to do anything. We just have to follow what the market says. And if you think that it's going to, can you imagine these folks that was here in 2022? They're like, oh my God, they're finally taking all that money out of the money supply. We're going to go ahead and get all the way down to the pandemic lows. Can you believe that? Right? And then out of nowhere, got liquidated. And shout out to all those that got affected by 2021. They were like, oh, we're going to get to 5,000 and baited everybody to keep on buying. And we are nowhere near 5,000 until we got to here, which was 2024. All right, so what was all that for? What I'm trying to explain to y'all is that at the end of the day, when you're looking at these levels and looking at these targets and everything else, that just because there is a target here does not mean that we have to actually go get it. It just depends if the market wants to go get it. So as we are looking at this gap was similar to when the pandemic was starting to be rumored for that drop. And that's what they did. They kind of rumored it out. Like, oh, guess what? We're going through some things, right? And the market's reaction was to sell, which create these imbalances, aka gaps. And when we had this massive drop off, which looks like it was February 25th or February 21st, 2025, when we realized, okay, we keep trying to go for these highs, can't get them. We had a nice December rally, but we don't have confidence that this is going to stay. We retraced. This was the retracement. Is it a reversal? Depending on your perspective. But overall, here's the next reversal if it was a retracement on some other high time frames. And when that happened, what did they go for? That gap that kind of created. They realized, oh, we need a price that everybody can agree to. It's down here. Bounce. Then come up. Bounce. Used it. Trend. After trend, gap. All right. So this gap and this gap is an eyesore to the market, because for every action it has to be an opposite reaction. For them to push all the way up, they need to have buyers and sellers participating all throughout that whole entire time, making these different levels of higher low, so that way they can go ahead and continue the uptrend. They have to do that. So now, if we're looking at that as such, then that means if I'm looking at a weekly, this price action that's here, this was the pullback to get those higher highs. And if we do not, this can be a weekly reversal if we broke out of this capitulation point. And that is market structure 101. All right, let's go ahead and get into that. I don't know, I just love teaching. I just automatically just go right into it. Ooh, that Russell. Wait a minute. I was waiting for the Russell to break this trend, and even though yesterday's action happened like this, look at what today's action is. We're getting new highs on the Russell, but we're not getting the NQ and ES. Are they anticipating for the small caps to be the place to park your money before CPI? Huh. Ooh. We're coming up to an order block, so I'm not saying for you to get into this right now, but this last bit of action feels like this is the accumulation for breakout more so than breakdown, which I was first anticipating breakdown. I was like, they keep riding this trend line, it's going to eventually break. But now it makes me think that everybody that was in from this party did not get off at this elevator. They are really still sitting in here, because for us to make a higher high, we need a higher low, and we're on this trend line right here as such. So I'm not saying that this is a breakout, but I will say the close above here has scared off the bears for the Russell, and I'll say be bullish on the Russell. Now, what does that mean? That also means that we could be pulling back on everything else to pay for the Russell. That's how the money kind of shifts sometimes. All right, so the US dollar is putting in a bit of a hammer here. I did point this out before, that when we was making this whole entire drop, that I felt like we had one more drop to go to kind of really put in that bullish divergence that the dollar is going to need. And I won't be surprised, spicy CPI data on Wednesday, reversal data in Thursday with the jobs report, and that would kind of give you that almost like pivot-esque type of response, and that will probably give you some liquidity to give this thing some power to make the dollar really push up. So look for, like, there's a lot that's going to happen this week. We're going to be at the 6 month of the quad witching. That means for whatever position we're in for the rest of the year, we're probably going to hold that direction. That's how I'm feeling. So we'll see how that works out. But you can kind of see double bottom here. If we break out of this micro trend, we continue to the upside. They rejected it, so I do think we're going to come down under this level and continue down. All right. I'm going to give you, because I got to do the upgrades to this PC. I'm going to give y'all 3 to 5 tickers here to kind of keep your eye on. Actually, I'm going to do it in the most comprehensive, aka laziest way possible, because I already got a whole entire list. Let's see, let's go with this list here. Okay, so I got, let's talk about 3M. I'm gonna change the dollar. I don't like changing the dollar. I like changing it here. All right, so 3M. So 3M, gotta stretch a little bit. 3M, if you don't know this company, this is a company that kind of like what happened with Johnson & Johnson. They gave Army folks like earbuds and all types of just craziness. But they are such a very large textile company that there's almost no way that you can get them completely shot out the water. Not saying they're too big to fail, but you'll be surprised what uses 3M in some way, fashion, form, skin health and infection prevention in the healthcare segment. Um, let's see, consumer segment covers healthcare, home care, home improvement. The corporate and unallocated segment, I don't know what that means. Unallocated segment. I guess they just got a whole bunch of stuff. So AKA miscellaneous, especially items. The corporate expense net. What does the expense net? What else they got? What else they got? Um, Safety and industrial, transportation, electronics, healthcare, consumer. These are the places that they go. Like adhesives, that's what you probably know them for. But adhesive, it goes into a little bit more than just adhesive. They get into things like vinyl wrap for your car. Like it's just the craziest stuff that they get into. And then you probably see the 3M logo, which is a 3 and a M, not the MMM, in red. So just kind of keep that right here, right? And that logo's that's just prevalent everywhere. So I don't think that they're going to get destroyed. But they had a massive, life-altering lawsuit that happened at its peak around here in 2017. And you could kind of see, then again, if we follow market structure the way I've taught y'all in its entirety, not you, right? If we look at this, this is your a downtrend right here, right? So if this is your downtrend, look at that. So when the lawsuit kicked in roughly around 2017-18 and they try to recover it, new news comes in saying, hey, their lawsuit is not resolved. I think here roughly is when they finally resolved, paid out everybody, and they can have that in their rearview mirror. Now they can focus on profits. So think of it like this. Over here, they had a certain amount of profit margin, and let's just use the EPS for example. 1.76 per share was what was their profits, right? And because of the lawsuit, they had to give a piece of that to pay for that lawsuit. So let's just say it turned into one. You're gonna get these guidance, like it got two right here, but they missed it there. Then they got two over here. You got 2.15, and then you got 1.9 here. So either way, they still had to make sure everything is a relative line. But all through that, oh, we didn't lose no EPS. Let's get in here. But those that know that there was going to be some chaos that's going to come. And look at that. This is the 1.86 when they guided for 2.08. This is probably the beginning of their allocation of the lawsuit. There you go. All right, starting to recover. Got hit again, probably different payout schedules. And then right here, they probably got hit and probably said something during their earnings like, well, if you think about it, we're almost done with the lawsuit and we can get back to our normal scheduled program. And then when this happened, this is the probably final pieces. Now it recovers. Now it's starting to push. And this is just doing fundamental analysis in a very crude and disrespectful ways. I'm not gonna lie, I'm not a fundamental analysis, but I just know the story. There's a little bit of a surprise down here with that whole entire drop there. Again, 2021 was rough for everybody. Okay, rough for everybody. So you can get a lot of smoke and mirrors getting out of that. Look at that, push it back up, and then right here they anticipated 168, and look at what it did. They got 193, nice surprise. The chart then tells you this. People start piling in. This drop off in April was just for people to get in. So I think, I'm not saying that this is going to happen. I think right now we are looking at here, we are looking at here, and we are looking at here. These are your targets, right? And I think what's happening with 3M right now, if you had got some 155 calls or whatever the case may be, those calls will probably give you some very, very good upside. Especially the way that it's bouncing off the 50 EMA. Let me come over to the daily over here. Yes, it is down here right now, but I think generally speaking, they're just building a position. And if it does that, cool. If it doesn't, just back away, because I would have a stop loss that's probably somewhere around the 140s, maybe down here 138. Because if it comes back to the 200, it might come back a little bit lower, and you probably get a better price over here because this is what we did. We bounced on the backside of that trend line that I drew. But over here could be their target, which is my 800 EMA. So this is going to be very interesting in the next few days, because if they do not drop it down to the 800, I would say that this micro trend that we're putting in, come on, get up there. Get up there. Come on, magnet. Right? This micro trend, especially that we just made a new lower low right here. This micro trend is what they're looking at to break. And the moment it breaks, that's the one that's going to start this party. All right. What else I got for y'all? Let's see. I think I already did Datadog yesterday. SoFi. Let's talk about my baby. My baby SoFi. Right? SoFi is one of those tickers that I really, really like because of what they are anticipating. If Uber did to the transportation business what they did, this is their attempt on coming after your JP Morgan and Chase and everything else in between. Not saying they're going to knock them out. Listen, JP has been here for centuries. And your Wells Fargo, same thing. They were ones that used to carry gold from the West Coast over to the East Coast. There's a lot of history in those things. And then Morgan Stanley's, of course, those that trade knows, right? But if you kind of look at this thing looking like we came up into this area, we're trying to drop it, and we're failing to drop, right? So nice little bounce. All right, take your profits. All right, cool. Oh, guess what? We should be good. Here's a chance to take your profits. All right, cool. Wait, why are we making high lows? All right, good time to take your profits. So it kind of looks like they're getting up into this area, and then we might go to like $15, maybe up to 16. So I do like a $20 call here, even though we might not get to $20 here. But generally speaking, a $20 call. What it do? You came right on time, Rod. You came right on time for my baby SoFi. Right, so I do think $20 calls will be solid here, allowing for you to kind of get into this register. I do want to see them break out here and use the fair value gap as momentum, but there's a lot that can go wrong with this ticker. So just be very conscious about this, because again, this one is one of those more volatile tickers, especially at this price. But if you're all right, it can print something nice. All right, let me get off of this so that way I can let Rod have peace, because you know how he feels about SoFi. All right, since I gave him one that he hates, let me give one that I hate. This is Crocs. Oh, actually, I think I already did Crocs. Yeah, I do remember. Yeah, they already covered Crocs. Let me get another one. I did Coinbase. I already did. Let's talk about Costco. Did I do Costco? I don't know if I did Costco. Oh, I don't think I did Costco. That's way too many lines. Let's clean that up. All right. So, Costco. Woo, boy. I had a whole entire plan for this one, and I thought it was going to take some time for this to happen. I was going to wait for CPI data. I hate when I do that stuff. You know what? I just gotta just get out there. Just get it out there. Just get it out there. What I was looking for was for it. Looking for if it can fail. So here is the official fail. You know what? Damn that. I think that that Costco can get to probably about 985, right? And the funny thing about it, we got to 997 and bounce. But that wasn't because of 997 to bounce, but I do think that they are trying to bounce it because of the 1000. They just had a deeper sweep to get as much liquidity as possible. Look for them to try to go for this gap and then reject, because we are in this momentum for this downside, and I do think, generally speaking, this is a continuation after making that curl, and here it is. If they can find a way to liquidate all the way up, which my stop will be about 1030, give or take, I would say this would probably give you a bearish divergence when it makes a high somewhere around that 1100, if that happens. But right now speaking, I got my 1011 that's broken. They've already shown weakness here. Whatever buyers that was here over at 1000, they're out of here. I would have loved to be already in it because that momentum should be there. But this pre-market being above gives an opportunity to go ahead and probably short this. So I think I'm on the shorts Costco in the most craziest time because it's going to be right before CPI. So just look out for maybe 985, 986. To be honest, I think this thing can get all the way down into the 940s as we try to test the 200. But I do think that when we broke through the 200, came above the 50, this was the bounce. I wanted this momentum. I really did. I wanted to have this one. So very interesting where we are. I think I'll probably be pulling the trigger. Oh, it's 9 o'clock. Let me give you out one more before we get out of here. I think I already talked about Apple. Did I talk about Apple? I don't know. I think I talked about it briefly on the fact that they had the WWDC. But you can kind of see microtrend, and that microtrend has been making deviations after they made new highs. You could kind of see that there. So if they're making deviations, then that means this one is a deviation to that, and that's the consolidation trying to break through off of this microtrend that was created to get there, which was this here. And right now we're in the middle of no man's land, aka order block. Maybe if I go over to the, oh, this is my weekly. Ooh, wow, interesting. Let me come over to the monthly. Let me see if I can see something there. Yeah, so assuming that this area here is your order block, this is them trying to break under the order block, couldn't get it. This is them trying again, couldn't get it. And I think we're probably going to get another dip into here. If we do not break this area, then we're probably going to get a bit of a bounce. But I do think that they're going to try to get into the 190s one more time. Only reason why I think that is because you can see with this monthly, and of course they got earnings on June. Oh no, actually this is going to be July. Never mind, they don't have earnings yet. But you could kind of see the trend. We've been pushing down, pushing down, pushing down, pushing down, pushing down. So they want to see if they can get as much of these new buyers that stepped in inside of this wick. How many can they liquidate? That is the question. I think 190 is a good number. If I am completely right, we should be getting into the 157s. But if I'm wrong, at least this bounce here would have been your order block to get up there, and they would at least be testing that order block again. That'll be your break and retest to break out again. You know, kind of like a W pattern, or very, very large W pattern. All right, let's go ahead and get out of here. Again, don't forget, hit the like, subscribe, and the bell button. Down below is the link so that way you can get your free 101. It's going to be going all the way into the end of June. And I want to say thank you very much for participating in BYTTT. I'm going to go ahead and upgrade this PC. That way I can start up on time without all this lag and delay that just keeps on slowing me down. It's 3 years old, so it's time for me to go ahead and do some changes to that. So I want to say thank you. Don't forget to share this out to your friends and family, those that are trading, that would find this information very valuable. That said, I will see you tomorrow. Have a great day.